Hello and welcome. And we're here at Holistic Investments, and I'm your host, Constantin Kogan. And I'm delighted to have here Mike Ting and Lawrence Wong, who are co-founders of Flurry Finance. Hi, guys.
Hi,
Hi, Constantin.
good morning, everyone.
Good morning.
Thanks for having us today.
So that's morning in New York and late evening in Hong Kong, right?
Yes, around
Great.
Yes. So you see, we're actually creating bridges between the two worlds, different hemispheres. So we're going to talk about exciting topics. The Flurry Finance is a cross-chain, so no-log stablecoin aggregator, and for full disclosure, Blue Perks, we're investors. But at the same time, we want to also traditionally provide you the disclaimer. So this content is for informational purposes only, and you should not construe any such information or other material as legal, tax, investment, financial, or any other advice. So now we can talk about a lot of things, right? And we are excited about the project, but I want to make sure that this interview is not biased, right? So I will still ask you tricky questions. I want to make sure that you will do the best job to provide the full picture of what is Flurry and why is it relevant today. So we obviously did our due diligence before, but I want to first talk about you guys, right? How did you meet as co-founders? How did you come up with this idea?
Yeah, sure. Maybe I would start by introducing myself first. So I'm Mike, the co-founder of this project. Actually, Lawrence and I met each other like years ago, like 10 years ago, when we were still working in investment banks. So we used to be at the same trading desk. So both of us spent most of our career trading stock and derivatives in Hong Kong, Singapore, and Korea market. And I entered the crypto space in 2018. So it's a bit late compared to a lot of crypto traders, but then at that time it was a good level to get in because price just dropped from 20,000 to 4,000. So it is still like Bitcoin is still like the asset with the best return in my portfolio. And in the beginning, I was applying my trading knowledge to trading crypto derivatives. And then I started C-Trade, which is a crypto derivatives trading platform in 2019. And in 2020, in that summer, DeFi was really hot. And I started to feel like DeFi is starting to bring in a lot of application scenarios to blockchain. So we find that it's a lot of opportunities that we can recreate a lot of like traditional financial products in a decentralized way using blockchain. And that is why we started to look into DeFi and came up with this idea, Flurry, which is like a traditional money market fund that manage stablecoin for our users. And both Lawrence and I had a computer science background. We were like, I studied computer science at Cornell University and Stanford University. So we think we both had a good mix of skills in both finance and blockchain, and that's why we are now doing this together. So that's it about me and Lawrence.
Hi, I'm Lawrence. So like Mike mentioned, we were both computer scientists by training, and we have both spent the last 10 years or so in investment banking. I was first started, I had my computer science degree from Imperial College, and then I started in investment banks like Barclays Capital. Initially, I was doing programming for fixed income desk. And then I worked with Mike on equity derivatives. I was a warrant market maker. And I had, after that, I started my own firm doing low latency algo trading. And in 2016, I first started looking at crypto and blockchain. And initially, I wasn't excited about crypto at all because everybody was still questioning where the value comes from. Why is Bitcoin a store of value? I was more excited in the technology on blockchain. I think it's a game changer. I think the level of change it brings about is like almost the same impact as the invention of internet. That's why I start looking into blockchain, and I actually put aside my trading business and went into join a startup called FinFabric, and I was one of the two developers who wrote the digital asset platform from scratch. But at the time, was using a private blockchain technology Corda, R3 Corda. And that project is about tokenizing private assets. So private debts, private loans. We even tokenized movie funding So we had issued a movie funding token, but that's a private token. So and then I came our path cross again. Because Mike at that time was running his crypto exchange, and we basically both found ourselves interested in the same the market again, and so we got together and started this project.
No, great. I mean, you have an impressive background. So yeah, anyone who's interested, you can check their the LinkedIn of Mike and Lawrence. And yeah, that was one of the first things that attracted my attention. And you also have practical experience in the market. But I want to focus right now on the problems in the industry, because I have a lot of friends they have like stable coins. They believe this is the future. Also, they like, they're just like crypto and stable coins. They go like in and out, and they're like sitting on their accounts, not doing anything, right? And they have options right now to use more centralized solutions like Celsius, BlockFinex, or to go more like into DeFi solutions, whatever that be, like Compound, DYDX, Aave, etc. Right? So let's just define where is the problem if I have, let's say, 10,000 USDT, right? And I want or USDC or any other stable coin. And what would be the best option for me to find the yield, and how are you solving like one of those problems?
Yeah, I think you brought up a really good point. So there are actually like two types of stablecoin owners that are looking for yield. So some of them like DGen, they are just looking for the highest yield. They don't care about the risk, and they are really experienced in using different products and using leverage and yield farming to get different reward tokens. So they really know the game really well. So this is one group of traders. But then there is actually a much bigger market, which is the stablecoin owners, which are only asking for a stable and safe yield without worrying about the risk. They more care about the flexibility of using their stablecoin when they want to trade. So that's why we came up with this Flurry, because the main pain point at the moment we think is not really the yield level, because the yield level of like 4 to 5% is actually acceptable to a lot of people, given the yield in the traditional world is like close to zero. So they are basically earning nothing anyways, right? So we don't think it's the yield, but then it's rather the user experience. So right now, if you want to look for yield or participate in any DeFi products, so first of all, the yield is really fragmented among all the products. So you have to look at each product, understand the mechanism, read the white paper. To be honest, even someone with our technical background would find it difficult to understand in some products. So if you ask someone without technical background to read all the white paper and understand the risk and use the product, I think a lot of people just give up and they don't participate in DeFi. So that's a bit unfortunate, because DeFi itself is a lot of innovation, but then the user experience is not catching up. So what we are trying to do is to make this experience as easy and simple to use as possible, so that people can just look at their wallet and then see they are earning interest without worrying about all the tedious process behind. That's why we think we come up with this product. We automate everything for you, and you don't have to look at different products anymore. You hand your money to us, and we manage the fund for you, just like the money market one.
So basically, the first level is research, right? The filtering, like the proper stable coins, whether doesn't matter whether it's fiat based or crypto based, algorithmic, and you due diligence them before onboard into your product.
Yeah, correct. So we use our expertise to screen out the products that we want to use, so that you don't have to worry about this. And then another good thing that we can offer to our users is that we can diversify the risk, because we can split the fund into different products. Whereas individuals cannot split their fund because of the gas cost. It's just not cost justified for them to split up their funds and pay gas fees for like 4 to 5 times just to spread out the risk. But then we as a pool, we can do it for the user. So we diversify the risk for you. We lower the average cost for all the users. So everyone benefit from using Flurry, and they also don't have to worry about like the risk of the underlying product, because we do the DD for you. And another thing is, I think Lawrence will be very excited about like the cross-chain feature of our yield aggregator, because at the moment, like most of the yield aggregators out there are limited to either Ethereum or some single chain, so they cannot work cross-chain. But something that we really want to focus on is the cross-chain feature, which Lawrence is spending a lot of time on studying the cross-chain bridges, how to sync up the state such that users don't really have to think about which chain they are on. They can earn interest on different chains. So maybe I will leave it to Lawrence to talk about the cross-chain when if you guys want to find out more.
Should I go for it now? Okay, sure. So yes, so basically, I shouldn't have to worry about how much gas I need to pay. If I have stable coins, I might not have enough Ethereum. I might have actually entered the crypto space via a centralized exchange like Binance. I just deposit some fiat, I convert into USDT, and then I withdraw it out from Binance, and here I am trying to start my DeFi journey, but I don't have any ETH. So the first problem I have is to buy some ETH from somewhere. Like I don't know how to use Uniswap and stuff like that. So all these problems, we try to make it simpler for the user. And also on different chains, you have ETH on Ethereum, you have to buy Matic, on Polygon, and you have to, buy, BNB. And all these are just getting a bit more too complicated. If I want to move my coins to different chains, it's the process is so complicated. You have to jump through hoops to do it. And that's why I think this feature is going to be very attractive to a lot of users, not just beginners, but even experienced DeFi users, because one, we are taking off the gas for you. We are saving gas costs because we are, as Mike mentioned, we are doing it in one go. So like during the day, people deposit onto a smart contract, we manage the users' funds in like one batch. So we just move funds in one go. Like we do this rebalancing daily, and that saves funds. And also we take care of the problem of bridging the underlying stable coins to different networks and invest in different DeFi protocols for you. So I think that's going to solve a massive pain point.
So let's clarify. There's one particular problem I want to discuss it really quickly, if I may. So there is like USDT. Yeah. There is USDT on ERC20, Ethereum, right? Protocol. Yeah, there's also USDT, let's say, on Tron or like BEP20.
Correct.
The BSC.
Correct.
Right, so I have on my wallet, let's say, $1,000 worth of USDT on ERC20, and then let's say on like BUSD or USDT BEP20. Now I want to like make this pool like unified and put like, let's say a client of mine needs a contractor needs a $2,000 payment, right? And instead of sending you two different coins, how can we simplify his life, and my life, so that we will send one unified stable coin with the pool? How are you helping with this?
Yes. So if to solve that problem, basically, if your money is split between different chains, you have to make three, like say over three chains, like BSC, Ethereum, or Tron. You have to make three transactions to three different addresses. You have to remember, the native addresses of the receiver, and you've got to have a wallet that has manager's account on three chains. We solve the problem so our rhoToken is actually the same. We are ERC compliant, ERC20 compliant, and through our website, you can just click a button. You can actually move the funds to a faster and cheaper chain like Matic. And if the user, so our aim is to have our rhoToken represented on all the chains, so that whoever you need to pay, you just find out which chain they're on, and you can move the tokens to that chain, and you can pay them. And the fact that the token itself is interest bearing means that the all the time the coin is earning interest. If you have to pay a user, you have to take it out of your compound or your DeFi because the money was locked up there, and then you have to make the payments. And then upon receiving the money, the receiver probably do the same. Actually put his money in compound or Aave to earn interest. So we simplify all that process by just sending the token to another user on the same network, or you can bridge it over to a different network and then directly assign it to a destination address. So that means like all that operation in one transaction.
Perfect. And then there's another challenge, for people how to do diligence. For example, there are several friends of mine, like when they first interacted with Tether, right? There was the most popular kind of concern was they were like, how can you even verify if there's enough reserves of any stable coin? If they're like the number one stable coin has questionable issue like that. So I'm sure you've been asked this many times, but just to maybe help like people who are just starting with this question. Yeah.
Oh, but that is actually an interesting question. So USDT, I mean, it has been around for like long time, and everyone is questioning like, do they have the enough like US dollars on the back to back it? But then, when you look at like the use of like USDT and USDC, USDC is like the most regulated, but then it's also like if people don't really want to be sanctioned by the US government, they probably won't use USDC. So I think in the long run, USDT is still welcomed by a lot of people that are non-US based. So I think it still has its position as a stable coin. I don't think it will go away, but then obviously lately you can see the trend of USDC market cap is going up quite a lot in the past few months. So right now, I think USDT is around like 60 billion, and then USDC has grown from 10 billion to 25 billion like lately. So the rate is, I mean, USDC is catching up, but then in the long run, I think it's still going to be two stable coin existing at the same time. And and by the way, when we talk about this stablecoin, I think we forgot to talk about the rhoToken, because we keep talking about the rhoToken, but then we didn't really talk about the mechanism in Flurry. Maybe I will talk about the rhoToken a little bit. So first of all, maybe we can talk about the name, like why we call it a rhoToken.
Yeah.
So rho is actually the Greek alphabet of interest rate, so that's why we picked this name. So it means rhoToken, that means in token with interest bearing feature. So when you hold this token, you are earning interest automatically. And in the first stage in Flurry, we are supporting the biggest stablecoin that we just talked about, USDC, USDT, and we also support BUSD. So in Flurry, the user just have to deposit a stablecoin at our platform. Then we will give them back the corresponding rhoTokens, rhoUSDC, rhoUSDT, and rhoBUSD. So you can look at it as like a rep stablecoin, but with interest generation capability. So once user convert their stablecoin to another form, which is our rhoToken, then they don't have to do anything else. Their wallet balance will grow every day according to what Lawrence just said. We will rebase every day to distribute the interest to the user. And there's one very important feature about the rhoToken, which is it can be acting as a medium exchange because of the rebasing mechanism that we talk about. So maybe Lawrence can elaborate a little bit on the rebasing mechanism, how we can maintain the peg. Yeah.
And maybe we can even shoot the demo, right?
We can. Do you want to do the demo at the same time while I go through this? I can do that.
If we, I think we can do. It's the best time, like to explain something, to showcase how it's working. I think, yeah.
Sure. Okay, let me share my screen. So our product is on testnet already, currently deployed to Robston and Kogan. And what you're seeing here is our own testnet. And this is our interface. Basically, it's designed to be simple. So the user come here, they pick the stable coin that they like, they hold, and they just like many other dApps out there, you just use your MetaMask. You submit a transaction to deposit the coin to our smart contract, and the balance just now has just gone up by 100. So what happened just now is that you have sent the USDT stable coin to the smart contract, and the smart contract has minted 100 rhoUSDC T back to you and in your wallet. So what happens is you see the APR here. If you click into it, so it's currently saying 10.36%. This is a copy of the mainnet. So i.e. We've made the snapshot of the live rates, and these are actually accurate. So you click on this and you see a breakdown of the vault. The vault is the bank, which holds all the users' funds. And you can see that in this vault, we have actually connected to 4 DeFi protocols. So we are connected to Compound, Cream, and then version 1 and 2 of Aave. And on the right here, you can see the supply rates. In the middle here, you see the supply rate APR. This would be similar to what you see if you go into their website and see, the supply rate, what kind of interest you can get by lending out your money. You can see that here we have the highest interest rate from Cream Finance. So what it does is the vault will actually deploy the user's funds into that protocol. Typically, what happens is you give them the stablecoin, they give you a deposit token. So that deposit token represents your lending. Mm-hmm. It's a token which is illiquid, i.e. basically your funds are locked up, you can't use it. To use your money, you have to unwind the structure. Or you could perhaps find a Uniswap trading pool, but there will be not very high liquidity. So it basically is not the same thing. It's like you try to sell your bond versus liquid cash. There's a lot different in liquidity. So what happens in Flurry is that while your money is earning interest, we calculate every time we rebase. We do a rebase once a day, and every time that happens, we calculate the net asset value, the current value of the portfolio of the token, and we reflect that value, that increase in value, by minting more rhoTokens. We call it a rebase mechanism. It's a bit like a mechanism.
It happens automatically or manually?
It happens automatically once a day. The reason why it's once a day, it's because we need to pay gas to update everyone's balance, right? So we don't want to do it too often because actually that comes out from the user's funds, right? So we want to save gas and save costs for the user. So we base once a day, and that's the time when the vault compare the market rates and try and make an optimal decision. It's like a money market fund. So it would find the DeFi pool, the highest rate, and then move the money there. So withdraw from one DeFi protocol and then put it into the best one. And
by the way, Lawrence, it's not triggered manually. It's by Chainlink, right? So we integrate Chainlink. Maybe you can talk about.
So we actually partnered up with Chainlink, and we are using Chainlink Keeper, which is a decentralized way of basically executing a smart contract function. So we could have done this by running a server-side process, make a smart contract call manually, but that would be like a centralized component we want to avoid. So our whole solution is decentralized, meaning that there's no server. Everything is on chain. All the code is open source. You can see what's going on. You can see exactly. So the whole so money market fund algo is actually on chain, and you can see the code. So we're bringing our expertise to everyone, not just traditional hedge. This is sort of the techniques we've learned throughout our experience from investment banking, and we are sort of making it available for everyone to use. So going back to the question of rebasing, when that happens, basically we calculate the latest value of our holding in the DeFi protocol, and we mint more rhoToken, and that would be automatically reflected by the user in the user's balance. So the user don't have to go to claim or unwind or do anything. The balance will just grow, and at any one point, each token you see, each rhoToken you see in your wallet is backed by exactly the same amount, or if not more, amount of underlying stablecoin that is backing the.
How can it be more?
So before you rebase, basically you have, let's say you started with $100 in the vault, and you minted 100 rho USDT. over like a week, that money would have grown.
The interest, right?
Before, so every day when we rebase, we bring it back in line by issuing more rhoTokens. So at any one time before the rebase, you would have slightly more money worth of USDT than rhoTokens.
Mm-hmm.
Yes. So that's basically how it works.
So that's I think that's exciting. So let's talk about. So right now you're accepting 3 major stable coins, and you. What is the plan? What other assets are you looking to support?
So there's a reason why we split it up to 3 stable coins. We think that at the moment, as Mike pointed out, we're not sure, which stable coin will become the largest. USDT and USDC both have its own characteristics and own demand and supply. So we don't know which one is going to win. But what we don't want to do is invent another stable coin. There's enough stable coins on the market, and it's very hard to differentiate yourself and let alone ask people to use it. I mean, all the centralized exchange have their own stable coins, right? So you have BUSD by Binance, and you have stable coin by OKEX. They would promote the stable coin by in their own ecosystem, but it would be very difficult to become a mainstream stablecoin and to compete with like USDT and USDC. So we're not trying to create a new stablecoin because that would be very competitive. Instead, what we're doing is we are a wrapper on any stablecoin. So if one stablecoin comes out to be the most popular one in the future, we will just wrap that coin. And what we are giving to the user is the risk is very clear and transparent. There are other projects out there which accepts a basket of stable coins. Like you can give it USDC, USDT, or BUSD, doesn't matter. We'll give you a new stable coin, and that is backed by a basket. The risk is not very clear, right? Because if anything happens to the smart contracts, if money got hacked, or if the price of the stable coin goes down because there is a confidence issue on USDT, like if there's some bad news on USDT and USDT goes below one to one, then it would affect the value of the whole portfolio, and the user might not be aware because the user could have started with USDC, put the money there, and thinking that his money is backed by USDC, but it's not. And because of the fact that the pool of money, like the proportion of these stable coins might be changing because they are investing in Uniswap, they are putting into different strategies, which changes the proportion of the basket. You're not at any one moment, you're not sure what risk you're exposed to.
So let's talk about the risk, if I may. So what happens in your case, right? If we briefly can, so in case, I mean, I guess I would say it's a radical example. What happens if, let's say, there is some insolvency issues, right? Or there's some there's some challenges, as you mentioned. There is like the market is not trusting the underlying assets, right? So and I'm already invested. Let's say I have 3,000 rhoUSDT. 3 months with you, I already have some interest, amazing. But what happens in your risk management strategy if something happens with the underlying asset?
So we can't avoid that happening, right? So it's not under our control. If there is a problem with USDT, it's going to go down, and user is going to lose on the current valuation. But what this product offers is no more additional risk. If you choose to hold USDT, you should be happy to hold rhoUSDT because we don't add any more risk apart from smart contract risk. So like in the case that our contracts are not safe and then it got hacked, but you can say the same for all the DeFi products out there.
Yes, I think lately, like there are a lot of hacks going on, like Titan or other like algorithmic stablecoin, because they have their own mechanism of maintaining the peg, and some of them are not 100% backed by the stablecoin. They actually are backed by the governance token, so they are exposed to the volatility in the price of the governance token, and that is why the peg is broken. But then in Flurry, what we are trying to do, as Lawrence said, is we are trying to make the risk really transparent. user only has to worry about the risk of the underlying stablecoin, and that's it. We didn't add in any mechanism to maintain the peg because the peg is basically 100% backed. So we remove the risk on the peg. You basically have to worry only the risk of the underlying stablecoin. So we give back the control of the stablecoin to the user. So he picked the stablecoin that he believes in, and then he just transform it to another form and earn interest. That's it.
Yeah, and another value
and
you're doing is also is also because you're always trying to find the better yield, right? So if we would maybe if we can Google that right now and just to compare, like if you let's say Compound or Aave, like will be how would the system work and how would you identify always a better yield? I think that'll be interesting.
Yeah, sure. So the yield you're seeing in DeFi is floating, right? So based on the current supply and demand, it's changing very rapidly. The funds are not locked up any moment, so we're free to deposit or withdraw. And if there are different, the DeFi protocols have different size, different TVL. So for a smaller pool, if the demand suddenly goes up, the smaller pools will be the ones that the supply yield will rise quickest, because it's based on how many coins are available for borrowing, and if the pool size is small, it will quickly be borrowed. So the pricing curve would push up the borrowing rate and subsequently the supply rate higher. So it is not unusual to see very different rates from different protocols. So we pick up on that. Every day we look at that and we decide which one to put it in. But then if the pool is small and we manage, let's say, a sizable pool of money, when we put money into the lending pool, it would actually push down the rate. So the algo takes care of that as well. So it will work out how much impact it will make to the pool, whether it's more optimal to put it to split the funds up and put half in different protocols so that we achieve the optimal return. And also you see on the top here there is a cash element. So we maintain some cash. Currently it's like 5% of the whole fund, and that's to facilitate withdrawal. If at any one moment no less than 5% of the funds are withdrawn, then we don't need to actually take it out from the DeFi protocol. So again, we're actually saving on the users the gas costs, and we manage the whole process to make it gas efficient and optimal based on the algo. And we will constantly improve the way the algo works. And when we come to cross chain, we also take into account the gas cost. So if I say, for example, I see 11% here, but I already have my money invested in Compound, which is earning like 2.9%. If the gas cost is very high, it might not make sense for me to switch. So because the rates are fluctuating, right? So one day you have protocol A being the highest, and then the second day protocol B being the highest. If a naive algo would keep on switching the funds, and therefore actually paying, if the gas price is high, it would actually lose money. So we put in place some logic to prevent that happening as well.
Yeah, that's really good. Maybe let's talk about a little bit about the governance component, right? What other ways you can actually use the raw USDC or USDT to participate in your ecosystem?
So our governance token is called the Flurry. At the moment it's only a normal ERC20, but in about a year's time, or maybe 18 months, we're going to move to a DAO model. We'll try to make this completely decentralized. And the Flurry token is going to be a voting token, which gives the users a voting right to say, what's the future direction of Flurry, which protocol we should integrate, or maybe which ones we should avoid, how much fees to charge, and things like that. So similar to all the other DeFi protocols like Aave, Compound, Uniswap, you can make proposals, We can even open up our source. So we define a strategy interface. Anybody who can program can come up with an interface and suggest like a new strategy. Mm-hmm. And we can vote on that and include a new strategy to manage the. So this is going to be a community product. We try to build, and also one thing I should also mention is that we are actually not competing with other DeFi protocols because we're adding TVL to their protocol. Mm-hmm. So we are not creating another lending pool and try to compete on the return. Yeah. Instead, we are introducing more flow to all the DeFi protocols out there.
You're another layer.
So hopefully, so hopefully we're building on we're using that as money Legos, as people say, and trying to build more sophisticated product on top.
Yeah, I think Lawrence brought up the main point of Flurry. So we try to bring in all these non-DeFi users to the DeFi space. So it's not a zero-sum game. We are not treating other DeFi products as our competitors. Basically, everyone will benefit from Flurry because we are trying to bring in those people that are not even using DeFi yet to the DeFi space. So the whole DeFi ecosystem will benefit, and the whole TVL in the whole space will increase. And what we are trying to do is first to get all these non-DeFi people familiar with this new farming experience. Very simple. You just have to convert your token to rho, and then you can earn interest. And when they are getting more familiar with this simple experience, then we can start to add in more complicated strategies that can give them a lot more yield. But then that, of course, is associated with higher risk. But once they are comfortable with the most basic and simplest way of earning yield, then they will start to move to other more sophisticated strategies. So that's the plan.
Mm-hmm. And regarding the interactions with the Flurry token, at this stage, we are giving out the Flurry token as a bonus. So like a lot of DeFi projects out there, we support staking, and we have three kinds of staking. So first, by holding rhoTokens, we will reward you some Flurry. So basically that adds up to your overall return, right? So if you're getting 11% from compound, from Cream, and we give you a bonus Flurry, that's going to, like, if you convert it back to the stablecoin, that's going to give you like maybe 20% return. So first of all, by holding the rhoToken, you already receive Flurry, and this you can see is like ticking block by block. So you can see how much you earn. The numbers are a bit exaggerated at the moment because this is testing, but this actually, you can see it ticking every few seconds. And the second kind of staking we support, it's you can lock up your Flurry by staking your Flurry in our smart contract, therefore locking it up and then earn more Flurry. So that's the snowball feature. And the idea there is that at the moment that there is not much usage of the token, but we encourage people who believe in our project long term to hold it. So if you don't mind holding it and then staking it into, we'll in our smart contract, we'll reward you with more Flurry. And then thirdly, at the farms, the website is not that responsive at the moment. So we are going to, on day one, provide liquidity on a few Uniswap pools. And if you participate and provide liquidity on these LP pool liquidity pools, you can take the LP token and you can stake back in our smart contract here, and we'll give you more Flurry. So the idea is we reward users who engage with our ecosystem. So if you have provided liquidity on a pair which involves either the Flurry or the rho USDC or the rho USDT token, we'll reward you with more Flurry as well. So at this stage, it's the staking reward given by the Flurry token.
Yeah. So you basically share your kind of your profits, and also you incentivize community to stay with you longer, obviously, right? So yeah, so this is great. So for now, besides there are private rounds, obviously, that you're finalizing. you can probably, say a few names of the investors that already backed you up, right? There's impressive names there. Let's talk about a little bit about your investors and your roadmap, and then we'll talk about the Flurry. Also, we'll come back to the question when it's going to be available for purchasing on the market, and when we kind of talk about more the scaling opportunities.
Okay,
Yeah,
maybe Mike
sure.
can talk about the project, our sponsors, and maybe I can talk about the roadmap.
Yeah, sure. So maybe I will start with the investors. So first of all, Blueperks is one of our investors. So AU21, and then basically, actually, I want to focus on the mix of our investors, because we, given our traditional banking background, we actually have a mix of investors from the crypto world and also the traditional world, which we think is really important because, as we said, we want to bring in more non-DeFi or even non-crypto people to the DeFi space, right? So if we have a mix of investors from both worlds, then it is very good for the product, because we can get in TVL from both worlds. And to be honest, a lot of traditional people, they are already studying on crypto, especially after COVID, when the government print a lot of money. So a lot of traditional guys are looking for ways to increase their return. So we've been talking to a lot of hedge funds in Hong Kong, and they actually hold stablecoin. They want to buy crypto, but then lately, because of the crash, they are not getting into Bitcoin yet, but they hold a stablecoin, but they are looking for yield. So they can be like the first group of users that can try out Flurry, because we think Flurry is like the perfect first product for such users, because they are not really experienced in the crypto world. But then Flurry is like the simplest product that they can try out as like a first product they try out in the DeFi space.
Yeah, we mentioned some traditional names from your investor list.
Yes, sure. So Soul Capital is like a Hong Kong family office. So they invested in a lot of tech startup like Google Van and some robotic company. So they usually do investment in the traditional tech startup, but then they started to look at crypto. I think started like maybe 2 years ago. So they have invested in us, and then we talk about like how we can earn yield for the stablecoin owners, and they actually have a whole network of like hedge funds and also other investors that are interested in. So we are going to approach them, and they will be our like first users. And also like Coin United is another crypto investors, but then their team is actually also a investor in a lot of tech startups. So that is another team of people that we will talk to. And the Coin United also have a wallet. So wallet is another partner that we will approach, because as we said, we want to make the rhoTokens a medium exchange. And to make it a medium exchange, first of all, we have to provide use cases. So we will talk to like centralized exchange to have rhoTokens, so that people can buy the Bitcoin or Ethereum using rhoTokens, or using rhoTokens as collateral for like trading derivatives. And wallet users, they usually have a lot of stablecoin, but they are not earning interest at the moment. And if they accept rhoToken, then they can just call our rebasing mechanism like every day, and they will see their wallet balance growing every day. So Coin United is one of the wallet players that we are talking to. And we are also talking to another wallet player in Korea. Maybe we will make the announcement later, but then these are the things that we are doing at the moment. And Lawrence, you can talk about the roadmap.
Perfect.
Sure. So we are actually ahead of schedule. We started the project in Q1, maybe March or April, and we are 4 months into the project. We have launched our solutions on one chain, which is Ethereum at the moment, and we are already testing the same solution deployed on BSC. So at the moment, they are sort of isolated smart contracts. The second stage, so our token is going to be launched in mid-August. That's the Flurry token.
Flurry.
And our mainnet, which is the rhoToken mainnet launch, it's going to be scheduled in September, beginning of September. And we will be rolling out new protocols every month. So we'll constantly integrate with more and more DeFi protocols so that we can increase the search service. And then we are already working on deploying our smart contracts on Matic and Binance Smart Chain. And we are already working on the bridge, which allows us to move the rhoToken and the Flurry token cross-chain. So in Q4, so our original schedule for cross-chain capability is Q4, and we are maybe be able to beat that target and achieve that functionality earlier. And towards Q1 2022, we aim to have the solution cross-chain. We have a vote on each blockchain, including Solana, Matic, Binance Smart Chain, and possibly Harmony. We're looking into that because all the chains that are EVM based, i.e. they run in the same, they support Ethereum virtual machine, will be very easy to integrate to start with compared to Solana, which is slightly different in terms of architecture. Yeah. So that's where we are at the moment.
That's exciting. I think like the roadmap, combined with the partnership with everything you have, right? You know, with the strong investors and your vision, I think, yeah, we see a huge inflow of capital that is going to DeFi. And I think why I was excited about your project as well, right? Because I realized that people need simple solutions, you know, like some basic like introductions and how you can generate like yield with the minimum risk, right? And if you already hold, you know, stable coins and they're just like on your wallet, not working for you, basically not earning you additional yield or earning yield, but like, let's say less than you can potentially get from the market because it can be only 5%. And because of your rebalancing tactics, I think that can be very, very attractive because people now have an opportunity. So easy to use interface. They have basically no lockups, you know, like less, they spend less money on gas fees. And in addition, they have always a better yield with leverage by, you know, professionals who are coming from fintech background and also allowing them to almost like arbitrage, you know, like Bank of America and Chase, who's going to fight for their interests, which is non-existent in the traditional world, right? I think this is the future. And the fact that it's like, we're still pretty early, right? You know, and I believe like billions of dollars will flow here, like, you know, like in the coming years. It's already there, right? But 60 billion in USDT and 25 in USDC, this is only the beginning. I expect like probably in 1 or 2 years, it's going to be over $1 trillion for sure, right? But the other aspect...
And even if right now it's only like 60 billion in USDT and 20 billion USDC, but if you look at compound and RFA, like altogether it's only like 10 billion there. So I think there is a lot of room for growth. Even,
there's no reason why you're holding USDT and not doing and putting it in DeFi. And the only possible reason I can think of is because it's too hard to use. People don't care. People don't know how to use it. And so obviously we can easily grow double, triple the current size if we can get more people to adopt. And this could be so our plan is to make some develop a presence in the crypto world, and then and make our entry into the fiat world. So imagine if you have so now USDT is supported by Visa and MasterCard, right? Well, there are plans to, and we are just a wrapper on USDC. So if you accept USDC, you should accept rhoUSDC, and there's a very good reason to do that, because imagine if you use the rhoUSDT on an e-commerce platform like eBay or Amazon, then you know all the moment that you receive. So currently you settle in some payment systems where you pay 2 to 3% of charge, and then you charge FX fees for converting the currencies, and the merchants might take up to a month to actually have their money settled from the e-commerce shop. All this time you're losing out on interest, right? On using the rhoToken, well, if you're using fiat, right, the interest rate is almost zero, right? So using DeFi, you can get 10%, right? So what's not to love about it? And on top of that, the moment you make your purchase, because it's done instantly on crypto, you're earning interest already. The moment you do that, well,
no, it's no brainer. 100%. It's I think it's amazing. So the last piece, like I think we can stop sharing the screen right now, right? The last piece that probably we can discuss really quickly is there are some regulatory concerns. I want to hear your opinion because I'm sure you also follow this news. In the United States, in Europe, like they're now trying to control like stable coins because when it's going to get into billions of dollars, right? And then will be probably $100 billions, right? So what do you think is going to happen there?
Oh, actually, I'm not that against regulation. So I think regulation is equal to an endorsement. So and a government will not regulate something if he doesn't like it. So I think the way of the regulation is actually endorsing crypto and stablecoin. And they are trying to tax like capital gain on the Bitcoin or digital asset as well, right? So if you are taxing something, that means you are endorsing it as an asset. So it's actually a good news because if this asset is endorsed, that means a lot of hedge funds can pass the compliance and they can actually enter this space by investing in a much bigger amount than what they are doing now. I think the amount of money in the traditional world is much bigger than like what is now in the crypto space, and that can easily like push up the price and the market cap of stablecoin or any other digital asset easily.
The last prediction really quickly. What do you think was going to happen with the yield then? Right? How long is it going to stay like 10-15%?
I think it's still like a few years to go.
Okay.
Yeah, and especially like if people like like in a bull market, the bull rate of stablecoin can go up to like 20% easily, right? So I think it is still going to be the same when the price pick up again, and it is at least another maybe 3 to 4 years to do all this DeFi new farming, like until the yield goes to like 2% or 1%. But then that is still better than the yield that you can get elsewhere. So when you have nothing, I mean, you have no choice but to participate in the end, even if it goes to 3%.
My prediction is if Bitcoin goes up towards 100K towards the end of the year, the yield is going to pick up again. Perfect.
So lastly, this is traditional because the name of my show is Holistic Investment. So for me, the purpose is also super important, and the why question. So I haven't prepared you for this, and I'm actually happy to ask you this tricky question, which is more personal. So first of all, why you're doing what you're doing and professionally, and what is the purpose of life for both of you?
Wow. Okay, Mike, do you want to give me some time to think?
No time to think. Answer.
Okay, so I'll go first. I'll go first. Why I'm doing it? Because I think the last 20 years has been a boom in the internet. So our lifestyle, people's lifestyle, are actually more and more digital. And the last 20 years has been exchange of information. The next 20 years is going to be exchange of value. So because money is involved, I think the requirement is a lot higher. People is going to take more attention. It's no longer losing your password or email. Now you're losing money. So I think there's going to be a lot of innovation in the space, and we are seeing a lot of people trying to solve problems like digital identity. How do you hold funds digitally in terms of legal, cross-border? Like all these are changing a lot of. It needs a lot of changes in regulations and people's behavior, but I think we're going to go that way. So Why I'm doing it is because the future is coming, and the earlier that I learn about it, the better.
Perfect. Mike?
Yeah, apart from the like technology, I mean that we can solve a lot of problems by using the blockchain technology. The other thing that I am really concerned about is, as I told everyone, I hate the government printing money. So I think the old capital market is killed by the government policy. So crypto is probably the alternative. So and I think it's kind of like a reset on the wealth gap. Although like a lot of cryptos are still in the control of like a small group of people, but then it is offering a new way of creating wealth, which is good, I think. And if there is an asset that is limited in supply and it gives the young generation a new way of like increasing their wealth, I would like spend my time working on this. So yeah, I like the technology. I like the way that blockchain is the value of blockchain is bringing to solving the wealth problem.
Perfect.
Yep.
Thank you, guys. I think it was amazing. It was really good to hear firsthand your perspective. Again, we'll share all the links to the projects. So subscribe to their channel. Like they have a very vibrant Telegram. Like you can ask more additional answers. The moderators are working like 24/7, right? And generally, like mid-August, again, like as a reminder, so the Flurry will come out. You will be able to earn it in 3 different ways, as Mike and Lawrence mentioned, and you'll be able to stake it. You will be able to find the best yield possible. This is one of the main goals of the aggregator, obviously, right? And and also mitigating the risk of not doing it on your own, not doing a hefty research if you're not like so professional degen, because it takes a lot of time to research things and then instead of doing it manually, you have an automated, like easy to use with no fee platform for that. So I wish you luck, guys. I'm really excited what you're doing.
Yeah, thank you.
And
Thank
listen,
you.
I hope next time we do this interview, you're gonna be like $100 billion, in TVL, like at least, and then we'll talk about the different perspectives on how the banks will join you and support you in all your endeavors.
Yeah.
Thanks a lot. Yeah.
Thanks.
I hope so as well.
Thank you, Jen.